Hey Justin, how you doing? Bum, 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 bum. Oh, oh my gosh! How you guys doing? I guess I was live. That's what I get for not paying attention. Cold prep from Lexington, Kentucky. Now, I had some good dad jokes. I'll give you one. I'll give you one. Why are shrimp so greedy? Hello, Stevie. Why are shrimp so greedy? Because they're shellfish. That will be the only dad joke tonight. Actually, this is a really cool presentation tonight on, and I have to say, I put a post out today on how fast the dynamic changed. So do you guys remember in the summertime when Oracle like mooned $100 when they said they were going to invest $50 billion in AI? Do you guys remember those days? Like it was an out of category move. Like, I don't know, multiple sigma event or something like that. Do you guys remember those days? Like, you look at Oracle now, it is just trashed. I'm going to put this up here. I'm just going to show you how things have changed. Google's down. All of a sudden, spending money on AI is a liability. Now, again, these are very short-term things. I'm going to share my screen here. Whoop, nope, screwed up. Okay. I just want you to check this out. Also, put in here where you're from. I got Camano. Oh, wow. Camano Island, Washington. I don't even know where Camano Island is. Is it northwest? Is the northwest part of Washington or southwest? In the middle somewhere? I don't really live on an island. I live on kind of like a funky peninsula. We got Illinois. Look at what's happened to Oracle in the last couple of months. Simon, New Jersey, I like it. Crispin from New Hampshire. Oh, by Mount Monadnock. You know, there's a building in Chicago, the Monadnock building, as I recall. Florida Ace, Delray Beach. Are you guys above freezing yet? San Bernardino. I used to drive through there when I was going to Palm Springs way back when I lived there. Boston, Mass. But I just want you to show you what happened. Oracle is down $200. For a while, Larry Ellison was the richest guy in the world. And right now, Oracle, we are like, I think this is like a 5-year level. Okay, not 5 years. It is at the bottom of the tariff number. So again, for the most part, what I have seen is earnings have been pretty good. But I think at this point, the market's like saying, hey, show me what you could do with your spending, Oracle. And Google, right? Google is very similar right now. Amazon too. Amazon, we're going to spend $200 billion 200 billion on AI. Right. And I think we're at the point here too. If I go 5 years. And so the high, like post-COVID, we traded what, almost 200. Amazon has only up. That is not a whole lot there, right? We're only up 10% from the COVID lows. $190. We're trading. Amazon is currently trading 200. Like, we're here. I'm just like, yeah, I think there's some opportunities out here. I would be surprised if the market is lower next week. Just, mostly because most of the earnings have been very good. I'm going to add a little big tech. Microsoft I could wait on, but I think Amazon I'm a little bit more excited about. Maybe adding a little more Google. But for the most part, now one last thing I'll say. So I don't know if you read I put out a newsletter every day. And the thing that was the most surprising this week was how steady VIX was. We had on Monday, right? All the earnings were good. The news was out. And then all of a sudden, things just turned around. And ever since then, it's the AI narrative turning around. And this is part of what Hans is going to talk about tonight. And I have to admit, you guys should pay attention. Hans was really good at this last year. He spends a lot of time kind of digging in and out. I just look at volatility now. But for a signal, a service like Hans is what I used to find, stock names. Okay, what stocks do I want to own for a long time? So is big tech not good now? I'm an ETF, which is tech heavy with the Big 10. I wouldn't say it's not good, Larry 12. I think you could take your time buying a little more right now. So wait till you hear what Hans has to say tonight. I think you'll get some answers. The only one I think I'm really interested in is buying Amazon and Google right now. Not so much Microsoft, possibly Meta for stocks, possibly Meta. I own a bit of Meta when everything sold off from April. But Meta really hasn't done anything in I think at least a year. Meta's unchanged from the year, and the earnings growth has been pretty spectacular. So the market, and this is what Hans is going to talk about tonight. He's going to talk about, hey, and what I think is we're kind of now in the show me stage for AI. We're beyond kind of the excitement part, and between Meta, Microsoft, Google, and Amazon, they're going to spend $750 billion on technology infrastructure spend this year. That's a big number. 4 companies. Mike M likes my daily emails. That's good. So yeah, if you want to understand where big tech is going and to be honest, I love this because this is something that I parallel in capital gains with my partner there, Frank Gregory. A lot of the same stuff, we parallel these ideas. So I'm glad to hear that Hans has similar ideas than we have. So I'm very excited for this presentation. And I think, is he in? Oh, I think he's in. I don't have his camera on though yet. All right. He's getting there. He's warming up. Where is the Hans thing? So, Carol, it's going to be in here. Right here in 5 minutes, Carol. It's going to be right here. I probably will be here shortly. You just have to, cool your jets a little, get a glass of wine, get a little notepad out with a pencil. It'll be happening. It'll be happening. So what I would say is, any hope for Peloton? No, I sold all my Peloton today, WA. Totally disappointing earnings. Market hated it. There's massive call buying. Lou from Plano, Texas says, "Let's go." All right, I'm ready to go too. Come on. Oh, there he is. Okay, hold on. All right. So what I'm going to do now is I'm going to do a little rearranging. I'm going to do this here. All right, we're going to do a little rearranging here. Okay, we're starting with that. I'm going to bring in my the king of income. He's coming in. And I think we're going to get going. Hans, how are you doing?
Andrew, I am well. How are you doing tonight?
I am doing not too bad. I'm doing not too bad.
Fantastic. All right. Fantastic. I noticed you talked about Peloton. You said there's no hope for Peloton. There's probably no hope for me to even use my Peloton. So
that's kind of what I came to the conclusion on. It's one of those things where I owned it. I had made some money on it. And then I'm like, and now all of a sudden, I still think the network is going to be worth money. But right now, if the market doesn't like it, then it doesn't really matter. So there will be another opportunity in Peloton.
There will.
So, all right, I want to get going here. Let's see if I got everything up and going, because they left me to do this instead of Hannah, who really is the qualified person to do this kind of stuff. But I think we're up and rolling. We look good. Let's see here. Do we look good? We got everything up? Lou from Plano, Texas, right away. Okay. Carol, I was looking for Hans. So you know what, Hans, you have a fan already. All right.
I like how this is all written in almost like a 1978 font, like it's Space Invaders or something like that.
I know, I'm waiting for them to come out of the woodworks. All right, so everybody, kind of strap in a little here. We're going to spend an hour. This is a fantastic opportunity to go from AI 1.0, which, to be quite honest, Hans nailed. Even in mid-April, when everybody's like, no, Hans was like, you guys are all crazy. Buy this stuff. This is an opportunity. We'll talk about that. But anyway, so at OptionPit, every week we have a trader meeting, okay? And we talk about the trades or the opportunities that are, unique and of the moment, like whatever trends are emerging, anything like that. And in the last few weeks, Hans has kind of been banging the table on this. He's like, okay, guys, this is starting to go away. The AI thing is going away. The software is having problems. You need to focus here, okay? All you Americans, because Hans is Canadian. He's not too condescending, but Anyway, says you got to focus here. So tonight is all about the next phase of what Hans has been talking about and where the money is going for 2026. You can already see, right, what I was trying to show you earlier. Money's leaving Google. It's leaving Amazon. Like, where is the money going next? And you are going to be surprised. Okay, so and again, when you see his ideas, his track record, you'll start to believe me. All right, so let's get going. All right, first disclosure, OptionPit, informational, educational purposes only. You're responsible for your own losses, even though at OptionPit, we do all our own trades, everything we put out, we do. Also, to the extent make use of a financial advisor. This is your disclosure. Now, I will describe Hans. Okay. Option floor trader in Montreal and Toronto, I believe. Equity fund veteran. He's managed $1 billion in ETFs. He's generated $750 million in cash flow, thus his nickname, Cash Flow Hans. Lives in Toronto, and he's run big data funds for 5 years. So I just want to introduce you to Hans right now. He's kind of our magi of AI. I kind of like how that sounds. Hans, welcome. I can't wait for you to get started and kind of give everybody the next layer of where things are going.
Thanks, Andrew. And thanks everybody for showing up tonight. We're going to have a little fun. We're going to learn something. You talked about me running those funds. It's kind of funny, you know, with technology, things come in and everybody gets super excited. And then like blockchain, like 8 years ago, and then, you know, things get overhyped. And then, you know, we realize that it takes some time. Really, we are now in the singularity, right? We call it the AI singularity. Things are actually happening. And they're happening very, very quickly. And if you're not thinking about AI in literally every single investment decision you're making right now, you're not locking into what's happening. It really is that simple. I don't state this lightly. It cuts through literally everything. It's a fixture of our new world. So we've got to be aware of that. It's driving productivity. It's driving CapEx, labor decisions. I mean, all eyes on labor, right? This morning with the numbers. It's driving infrastructure. So hold that thought for a moment. And it's driving the markets that we trade. Of course, this is the end important point here, is that we are trading, we are investing, and we need to realize that it has an amazing influence on all that. So the market has shifted, however, in a very pronounced way. It's kind of amazing how the calendar flips, and you're like, I mean, some of this has been going on for a few months now, but it's really starting to accelerate this sort of regime shift. And there's a structural change in how the world operates, the way capital is flowing now. So, and there are some charts out there, I kid you not, that are breaking out for the first time in like decades. And that's how important some of these shifts are. And so this singularity, as I call it, and other people call it, if you've been living under a rock, maybe you haven't heard about Claude and these Claude bots and things like that,
right,
that are happening, and how that's playing out in the software space. And I said last week, I'm starting to get a little uncomfortable with how that's going to maybe sort of unsettle a few things, and it's playing out now. So this next phase, though, the AI 2.0 is what we're talking about, where it's not so much hype, it's about real things. So I'm really excited to talk about it, how this sort of profit, this sort of revenue pool is shifting into different parts of the economy and into different parts of the market. We need to be very aware of that, and I'm excited to dig into it tonight for everyone.
So before we do 2.0, let's do 1.0. Let's do a little review, because what I want people to see is the shift. I want to see, because money is already coming out of 1.0, and I want you to point that out to people.
Yeah, so this was the first phase of the AI cycle. So these are names we all recognize, and you talked about them a moment ago, and some of them aren't doing so well, which is really kind of playing into our topic tonight. This is the phase where everything exploded. ChatGPT hit the scene, and money rushed into basically anything AI, right? The big caps, the NVIDIAs, big beneficiary, of course, the Amazons, the Googles. These are sort of the toll booths, the builders, the physical builders on the side of GPUs, the chips, and things like that. The same time, you also had a little bit more excitement in those speculative names, the Palantirs, the Snowflakes, the Nebiuses. You know, we played some of these really, really well. And this was a little bit about kind of dreamy moonshots type stuff in some cases. But it was really about figuring out what's possible, prototypes, pilots, dreams, thinking of amazing things and valuations. Now, this is called the discovery phase, and it runs into reality, into bottlenecks, into what I call scarcity problems. And that's really what we're going to talk about today as we transition into this next phase.
Right. So in this right now, though, you did manage this well last year, right? So this is what you did in AI 1.0. These are the these are the ideas and the trades that you put out in this initial phase, right? You did pretty well. I mean, I think this
We done good. We done good. And a lot of these are just one trade out of numerous ones that we did in Micron, for example. So I'm going to reveal the secret to my success in a few minutes. But during this first phase, we had triple digit moves in a bunch of different stocks. NVIDIA, as you can see, I don't have to repeat all these, but these were really, really nice returns. And they were about being positioned early, not chasing things late, but riding that wave up in this 1.0 stage that we were in.
I know. Great job. It was really a great job. So here we are.
So yeah, I mean, this was it, right? And we know, remember, we all heard about, oh my goodness, the market's so concentrated. It's just the mags, it's just these big stocks. And you know, it was a time where you just had to, it was kind of like the old days, Andrew, with .coms. You just had to say AI and it benefited you. And that really worked. But that phase is over, right? It's not going to be as easy. And it's not going to be the names that you normally think of, right? These next winners aren't going to look like your software names. And that's why the opportunity exists, right? How does opportunity come about? It's when a lot of people aren't seeing something. That's what creates the opportunity. If everyone sees it, the opportunity is gone.
Right. And again, here, I mean, probably the poster child for the whole NVIDIA, right? Like all of a sudden, the old way not working. NVIDIA was from 2023 to, I mean, till what, almost to the end of last year, it was a sure thing, right? And now NVIDIA has dropped, what, 7% down on the year. So again, 1.0 not doing so good right now, pulling back a little bit. Amazon, look at Amazon today. I mean, you drew this chart here, and now all of a sudden we're trading 200, like from 250 just at, you know, not very long ago. So again, we can't use Amazon anymore. Alphabet. Okay, here's another one. Alphabet now is down another $7 or $8 after hours as well, but coming way off the top. So now all of a sudden now Google, okay, we got Google, NVIDIA's no good, Amazon's no good, Google's no good. Microsoft, I can't even believe it was $500 when I blinked, and now it's $400. Microsoft got murdered last week, right? So do you have a story about this? Like, why is Microsoft doing so bad?
It got murdered. And remember what this phase one was like. It was like they could do no wrong. No matter what happened,
Right.
these stocks did well for a while.
And now,
and so this is a great example of how there are now some speed bumps in the road. So on the side of what's done well over the last 2 or 3 years, we have speed bumps. We have challenges. Look at this. Trump tells Microsoft that they're going to have to pay for electricity. Do you say no to President Trump? No. You say, okay, he's saying, look, costs are flying up. You know, data centers are costing my people money. You got to shoulder some of the cost there. So that was a very important signal. I remember the time I said, boy, this is an important moment where suddenly the sort of the companies that have all this power and make all this money are maybe going to have to give back a little bit. Right. That is just another sort of little chink in the armor for this whole sector. So very important development.
So the old regime of the Mag 7. Is it out for right now?
That's it. The regime, and look, I'm not going to lie to you. You talked about it earlier. I like the toll booth idea. I like Amazon. I like a few of these names because they're still building our world. But the point is that there was low-hanging fruit for a long time, and now that fruit has been picked, and the shift is underway, right? And that's really the point of all this. It's not always this is completely irrelevant anymore. It's money flows like water, and we need to find out where the money is going right now. And you can very clearly see that it is not piling into Mag 7 right now.
It is not. So we need to know where do we go now? I think that's the thing that I think people want, everybody wants to know. I want to know. Okay, we had our time. Everybody enjoyed. You have to say everybody enjoyed great gains, right? So now what do we do?
Look, you can keep buying Mag 7, and I think there are going to be some interesting opportunities there. I mean, you're not going to go broke owning Google. I'm pretty sure of that. But you know, you probably don't want to buy the latest AI startup that, you know, your buddy on the golf course just told you about.
Right.
I don't know if you want to buy Bitcoin. That's completely been tossed out the window. You want to be where the real money is going to be made at this point, and it's not in the obvious places, right?
Okay.
You want to think of where the pain points are, the build out that is happening and going to happen in a very long and durable fashion.
Okay. All right.
So really, you guys have heard of the gold rush, right? This isn't just a saying to you, right? The gold rush, everyone was chasing gold and everybody went there. Everybody had these wonderful hopes and dreams, but who made the money? Who found the gold? Not many people. Right. Who made the money? It was the picks and shovels maker, right? Here's your shovel. Yeah, it didn't matter who found gold. Everybody had to own certain things, right? And so you really have to kind of frame everything you look at this point with AI in the back of your mind and with this picks and shovels sort of mentality. And AI 2.0, it really plays upon that concept.
Right. So now we want to know, like, where are the next, like, I'm pretty sure it's actually not going to be a pick and a shovel. We've come a long way in 150 years or something like that. So
that's right.
So, right. It's not a pick and shovel, but it's definitely like lower tech. It's almost like untech is what we need to build this stuff.
It's everything old is new again. Everything comes back in cycles, right? Just like my bell bottoms, they're going to be back in. I think they are already. So everything old is now new again, and it's really important, right? It's kind of like gold versus Bitcoin. Everybody said, we don't need gold anymore. There's Bitcoin. It's digital gold. Well, guess what? Gold's been doing fantastic the last little while. So everything old is new again, and this one, it has to do with the build out, right? We need to be making stuff because we've created all these expectations and dreams, and we want to make them come true, but we're going to need stuff, physical builders, the maintenance, the materials, those things you can drop on your toe, as I like to say. Without these, AI doesn't get powered or distributed, right? But you think AI is in the cloud? No, it's in the power lines. It's in copper. It's in steel. It's in concrete. It's physical. It's expensive. It's capacity constrained. That's where AI lives, and certainly is going to, and these things are going to be an extremely big focus if we're going to keep up with China, et cetera. We'll talk about that in a moment.
Okay.
So the companies that are going to do this are going to be those leaders of this big picks and shovels, you know, metaphorically and sort of figuratively as well, because there are different ways to look at this. And we're going to get to those names in a moment. So don't go anywhere. We're going to get to those very names.
Right. And this is a topic near and dear to my heart, by the way, because this is what Frank helps, focus on, government spending. Okay. All of a sudden, Uncle Sam is doing what?
Well, don't you love it? I mean, I love a theme that is, number one, a great story that private enterprise are absolutely on board with, and then the cherry on your shake, on the cherry. What is it? The cherry on your milkshake, or
cherry on your ice cream sundae? Yeah.
On your ice cream sundae, on your cheap ice cream sundae from Dairy Queen, is that you get government backing as well. Government saying this is a matter of national security. If we don't keep up with China, we're in trouble. We got to keep going. We're doing contracts here. Let's take a look right here. What does the government say? What did they say today, Andrew? They said, we're not backing Bitcoin holders. They're not going to bail out Bitcoin holders. Guess who they're backing? The build out. 100% they are backing the build out.
Right.
There you go. And spoiler alert, here we go. We're going to talk about Eton tonight, right? $340 million, while Microsoft has to pay for its electricity. So these guys are getting money to do work, and they're not going to negotiate with them. They're going to tell you, you do the work, we're going to pay you whatever it takes. While Microsoft is being told, well, you better shoulder the bill for some of these electricity costs. That is an extremely important change of regime to understand.
Right.
It's not cyclical. It's durable, right? This is durable.
All right. So
Here's
let's take a
another
look.
one. GLD more than tripled in 2025. In 1 month, it's up 30%. We just had an incredible trade on it in special situations.
So, by the way, is anybody in here investing in glass? That's what I want to know. So if you are, write up in the chat. You're like, yeah, I've been long GLW for a long time, and look at this. Okay, to Hans's point, in April this stock was $35. Now it's $110. All right. I mean, even before the April cycle, the stock was trading in the low 40s, and now it's trading 110. Something's got to be going on in GLW, Hans. Like, why do they want just glass?
And this is just getting started, Andrew. You look at this chart and you're going to be tempted to think, oh my goodness, I missed it. This thing was ignored for many, many, many years. And glass doesn't sound exciting, right? But it's what fiber optic cables are made of, you know, to take you back to 1998. But this is different. Photonics. Why do we need this? Because we're about to create more data than we can even conceive of. Anybody who watched my special situations 6-7 months ago heard me say that as well. It's going to be off the charts. Infinite parabolic compute needs are going to create data on a level we've never imagined. It's got to move fast. Glass means moving data with light, not electrons. That's how you get AI systems to go faster without melting down. There are a couple names out there that did really, one of them did extremely well over the last couple of days, even though the market's melting down. Photonics, glass, Corning. Boring is beautiful again, my friend. Boring is beautiful again. So, and again, here you go. Corning and Meta just entered a partnership worth $6 billion. So Corning's glass is going to build Meta's fiber optics for their data centers. I mean, this is it. This is happening, and this is the first of many, many relationships like this.
Unbelievable. Oh, and the White House.
There you go. And what the White House needs, the White House gets. Corning also got a bill from the government. And I'm pretty sure Corning, was that on your watch, at the top of your watch list, Andrew, in the last year? I'm pretty sure.
It definitely was not. I wish it was. But
everybody, okay, be honest, everybody. Anybody who had Corning at the top, in your top 20 on your watch list 7 months ago, please tell us. Or just lie to us, whatever. We want to know, but we're pretty sure that most people did not have it on there. But AI 2.0 is physical. It's dealing with scarcity. It's fixing. It's maintaining. It's expanding, and it's very, very exciting in an old school kind of way.
So just that we stop for one second, because now we've given people, you know, a mirage, right? So you have AI 1.0 is kind of suffering a little bit from highs, but kind of having a hard time. What we want to talk now, if we talk about trades, though, we want to talk about confirmation. So what does confirmation of a trade look like? So that's the next subject here.
Confirmation, as a trader, you have to think about confirmation because everyone's got an idea. They're like opinions. We know the old saying about opinions. 99% of people have an idea. And I've built my career off ideas. I think everything should start with an idea, should start with a thematic, strong idea. But ideas are just the start. They don't mean anything without confirmation.
Okay.
And without confirmation, it's difficult to implement that setup.
So I right here, you got invest in the wrong stock, buy in at the wrong, hold your position too long. So I do that sometimes. Exit too late. I just have to say, if you can't confirm your ideas, you could do one of the four at least. I'm sure the list could be a little longer, but at least one of the four. All right.
There you go. Investing in the wrong stock. You could be buying in at the wrong time, right? This is the risk in not just not finding a good trade, but getting into the wrong trade, which is going to cost you emotional capital, actual capital, frustration. It's going to keep you out of good trades. So we're going to talk about a tool right now that I have built over the last decade that I use religiously that is going to help to address these things.
So this is a phrase I think that people should remember. Confirmation equals confidence. Like you need if you have confirmation on what you're doing, you will trade confidently. And it's a good theme for people to remember. Now, again, take a look at this. Now, big line here, Hans's proprietary indicator. So we'll get into that. But you look at Adobe, and I actually got out of Adobe in the middle of the year, and it was all because of Hans. Because he's like, well, the AI thing, Adobe, they put the software up. He's like, not sure. As soon as you're not sure, and this is one of my things, if you're not sure, I'm out, basically. But the fact that Adobe is in a free fall for the last 6 months, lost another $100, is probably at a 2-year low, maybe. It's doing really, really, really bad. So it would be good to know, okay, how is your indicator helping us with a stock like Adobe?
Well, and that's it, right? It was cheap on a price multiple basis, cash flow basis. It was cheap at 250. It was cheap at 220. It was cheap. I mean, it was cheap all over the place. And so sorry, 350, then 300, then 275. So right. Here we are. We did not have confirmation that this thing was in a position where it could give you confidence that it was going to go up, right? And so thanks to my proprietary indicator, and I'm going to have a confession right here. We didn't even talk about this earlier. I actually picked away at Adobe at one point. And I think it was about 5 weeks ago. I didn't have confirmation from my MTI. Guess what I did with that position? I took a loss. I took a loss. I'm not kidding you. I took a loss. I didn't follow my own rule. My MTI indicator did not give me the indication that I was looking for. But I thought, you know what? Maybe they're right. Maybe it's cheap. Maybe.
Right. Maybe well, let's look at it in action. Let's look at it next time. I suggest you follow your indicator because it's pretty good. So take a look. Why don't you explain what's going on here? You got the chart at the top and you got your indicator at the bottom.
So you see it, all that red. So look at this. There's zero on this on this chart with my MTI at the bottom there. There's zero on there that's going to get you excited. There's not a sliver of green on there. And based on that, you can see the momentum is gone. It's not coming back. Even in those moments where you get the market rallying, where everyone's starting to get sucked in, right? They get lured in, and then it just flushes again because you never got that confirmation that we're going to talk about in a moment. So it was really quite strongly in a downtrend, and really that's something that can very much help you to stay out of certain situations.
And what I like about this indicator is there was it never, even though the stock had little tiny blips up, right? Because a longer term trend indicator, you never got any green. It never was really, there was nothing in there except you traded with a force, right? Which you got to put away sometimes. But it was kind of always red, and it's just a very steady down from 420 to 280, 275 right now. So let's dig into your indicator and explain a little bit to people, what makes it tick.
Okay, so here it is, and it really is quite simple. I wanted something easy: red, yellow, green. So hopefully nobody's colorblind here, but we can we've got reds, no, right? It tells us when it's time to get in, when it's time to get out, and this is really the big difference maker for me in my process. And that's really the hardest part of trading, knowing when that momentum in the stock is starting, stopping, and that's what this thing is measuring. So the way after I found these 5 stocks in my research, I checked the MTI, confirmed that the stock momentum was real. And as you'll see in a moment, it is. Red means stop. There's no momentum. It's slowed. It's a get in trouble moment. It's a sit on your hands moment. Guess what? Sitting on your hands is a valid position.
It is. Cash is okay.
Yeah, and it warms them up. It feels good. But yellow means caution. But maybe things are getting a little better. It's on the radar now, right? We're either about to go or maybe about to stop, just like a stoplight. And green, especially if we get 2 or 3 of those in a row, means go, go, go. Time to turbo it.
Oh wow. Okay, so now that you've said that, and now let's talk a little bit about how it works. Let's see it kind of in action. I would like to see it in action here.
Right. So here, number 1, the first step, very simple: identify the fastest moving stocks in the market. Got good strong themes. that you like. Number two, though, check the MTI. Confirm that stocks are moving in the right direction. They have the best momentum to give us the best outcome that we want in the end. It's easy to put on a trade. It's difficult to deal with it if you put it on under false pretenses. The MTI helps you with that. It does its thing. Step three, once I see a number of candles in a row, I'm getting much more confidence, right? Confidence is everything. And confirmation leads to confidence.
Okay. All right. So let's take the MTI. So this is a view here on TradingView. Let's put on a stock. Let's check it out for a second.
All right, Nebius, one of my faves. One of my faves. Great example. MTI caught this move in Nebius last year, and as it came out of out of the purgatory down there, it started to shape up nicely. It went green when the momentum stopped. It went yellow, then red, and it was time to get out.
Well, that's actually pretty incredible. Like it caught.
It was pretty cool.
Very well. Yeah.
And here we go. We traded it, closed it for 140% win.
And so just let me run through this a little bit. So you identify the fastest moving stocks in the market first. Okay. That's outside of the MTI. Then you check the MTI to confirm the stocks are moving in the right direction and to generate the momentum you need for the right outcome, right? So the MTI does its thing. It's calculating every day. And then once you see 4 or 5 green candles in a row, you have confidence, you have some conviction, and it's time to buy.
I'm going to give you a pro tip right now, Andrew. I don't think I've ever given you this pro tip. And I'm going to give everybody else the pro tip because you're going to get the MTI when you sign up tonight. I will run the industry, could be an S&P sector, could be even a subcategory through this. So I get a green on Nebius. Or whatever, let's say Amazon. I get a green on Amazon. Guess what I do next? I pop over and I take a look. Well, how is consumer discretionary doing? How is, the specific area that is in? Oh, I'm also getting a green there. I get even more confidence.
Okay, so let's check it out. Let's kind of rip through these ones here and let everybody understand.
Right. Like, here we go. Palantir.
What happened?
Yeah.
These are some big names in last year.
Beautiful. I mean, Palantir was one of the top performing stocks. We played that a number of times on the way up. Nailed it. Got out right at the top on one of our trades. Beautiful 89% on that one. NVIDIA, of course. I don't know if you guys have heard of NVIDIA, which has been trending up. We waited for the MTI to get us in there. So beautiful move. We had a number of those as well. 258.
Small gain. Small gain.
Yeah, just a little gain on that one. Just a little one. Got in, green, boom, gets you out, keeps you in, right? What's one of the hardest things as traders, right? What's the hardest thing? Put it in the chat, guys. Is it getting into a trade? Is it finding the trade? Is it staying in a good trade when you've got a good trade on? Is it getting out for a profit? Getting out when things don't do well? What's the hardest part for you? Well, you got to make the most of those good trades. You have to. That's part of it. You can't, if you make a buck, you lose a buck, you make a buck, you lose a buck. I've had students come to me and go, you know what, Hans, I feel like I've got good trades, but end of the year, I haven't made anything. Well, you got to stay in trades, right?
That's a month. That's a pretty good hold. So the MTI goes green. Okay. Uptrend is building. MTI goes yellow to red. And then your uptrend is gone. And that's kind of here. That's what happened here with Apple, right? You had your three green candles, and then all of a sudden,
all of a sudden it turned on me as Apple sometimes does.
Right.
It turned on me. And now the important part is you can see as the evolution of the MTI happened here. We pop over to that second circle, we get the red. But guess what? I didn't get out. I should have exited my trade. I should have.
We're all guilty of it every once in a while.
I'm human.
And then
I'm human.
Yeah.
And then we get the third circle and it just plummets even more. It plummets even more. It told me, the MTI said, it's time to get out of Dodge. And so you learn over time to do things the right way, to break your rules a lot less because it's a smart thing to do.
Right. So green means go. And this is what I like. Green means go. Red means stop. Okay. So it sounds simple, but how is it calculated?
There you go. So, well, it's a number of things that I've built up over time. So, and you'll appreciate this, Andrew. We've got our moving averages. We've got our parabolic SAR. You guys can look that up later. We've got our MACD, our histogram in there is the part that I like there. We've got volatility levels, right? Sentiment. What are we trading when we trade options? We want to trade. We're trading sentiment, good, bad, and everything in between. So, this has come about from years of having sort of figured out what works for me, all my years of market making and managing funds and all this stuff crammed into my head. You don't have to trade for 30 years like I have. You get the tool right here.
And this is what I like about it. It's like you've taken like all the flow you used to do on the floor and you put it into an indicator, which I think is very cool, by the way. Very cool. So, but this is the good part. So everybody kind of be ready, get ready. Because now what Hans is going to talk about is now we move from AI 1.0 to AI 2.0. So this is, you guys want to pay attention to the next 5 slides.
Okay, so here we go, guys. The top 5 AI 2.0 stocks of this year. So everyone get excited. We're going to jump right in here and we're going to look at number 1, Quanta Services, okay? These guys don't make chips. They don't write software, thank goodness. But they build the infrastructure that makes all of this possible. And they let the software guys cut each other's throats. Because guess what's going to be happening on the side of the ledger of the last 2 or 3 years? The stocks that have done well are going to be competing to the death. It's going to be like a scene out of Gladiator. Everyone's going to be margins getting crushed. It's going to be absolute chaos. These guys don't care. Remember the picks and shovels? They don't care. They go out. It's about electric power. It's about pipelines, about communications. They handle everything. They do the planning. They do the design. They do the upgrades. They make sure things don't blow up. Think that's important as power needs absolutely explode in an era of infinite compute. We got to make sure stuff doesn't blow up. And sometimes maybe it does, because guess what? Our infrastructure is like 45 years old and sometimes bad things happen. Who gets the call? Quanta. Beautiful. This is AI 2.0, boots on the ground, not cloud narratives, real stuff.
And I like how the MTI is kind of turning nice and green there here. Even when the market looks terrible the last few days, the stock is looking very good. So.
It was up today. It was up today, Andrew. They're catching on, right? So here's another one. Eton Corp. We mentioned it earlier. Another quiet winner. They're not building AI. They're managing power. So all that exciting stuff you want to hear about, switch gears and breakers and electrical systems, all the stuff that data centers actually kind of turn on. We need these things to turn on and not turn off. This is 24/7. Remember all the stuff I've been yelling about for months. The inference phase is gears never stop turning. Right. They never stop turning. We need this to be working and efficient, and power is going to be the bottleneck. Compute needs are going to be crazy. And companies like Eton are going to be getting phone calls. They're not going to know what hit them. Over the last few years, they'll be like, we used to be bored in the office. Now we can't, we don't know what to do with all this business.
I have a question for you. So Eton Corp, like right now the chart looks kind of like a little wishy, but right now the MTI is yellow. So it's not time to jump in yet. Is that what this chart says?
Exactly. You want to bide your time. You want to make sure this is happening, because you'll notice there's a couple of little false starts there. This thing is like that cruise ship that starts to turn around, and especially in income trading, stability is one of the most important things. I don't want to take a chance. I want to wait for the right signal, because I'm not always interested in grabbing the very bottom. When you try to catch a falling knife, Andrew, you keep catching it day after day. I want stability, and I want things going in the right direction.
Correct. And also, as a little reminder, the government has given them a little kick in the pants with $340 million. So it's a good one to keep on our. I'll put it on. Well, it's going to be on my watch list after tonight, of course. But
beautiful. Now Hubble. This is not the telescope. Hubble sits even closer to the hardware. They make electrical components, again, to connect us to the grid, connectors and enclosures and all that boring stuff that is an important part of this new modernization of infrastructure, right? Everything old is new again, and we better spruce it up, right? Everything's going to need a makeover if we're going to be able to handle what's about to happen, and it is not going to be insignificant. So
Right.
when grids are in need of TLC, Hubble's parts are all over that. There, to your product, Andrew, fingerprints, Hubble's fingerprints are all over everything.
So I've noticed, so we have 3 stocks. Now, one thing I've noticed about these stocks is they're not cheap. Like $300, $400, $500. How
They're
do
not.
you plan on trading them?
They're expensive. So what do we do? Well, we do what we do best, which is we go out and you can buy a couple shares. But if you really, really want the benefits of options, that's how we address this. We use options to get into these more expensive stocks and to play that explosive upside.
Okay. So, stock 4, of course, but you're not going to tell us what this one is.
I'm not going to tell you. I'm not going to reveal the name of this one because we got to keep something to ourselves, right? We got to keep something to ourselves. This one, I'll tell you, it's about energy flow. It's a different company from these other ones. It operates pipelines. You can probably guess what that's about. Okay, I'm going to tell you. They operate pipelines that move natural gas. That's increasingly the need. I need it yesterday. AI fuel, right? Nuclear is a little bit, in the distance. And we need stuff to address the power needs right now. And one of the things that I really like about these guys, and I know all of these companies, these guys are the best at increasing capacity. And what have I been talking about? Capacity needs exploding everywhere, right? We've heard of these chip companies. We don't have any capacity. There's so much demand out there. There's endless demand and there's limited capacity. And these guys are good at expanding that.
I have noticed too, there's 5 candles there on the lower right. So this one's kind of heating up in the right direction. And number 5.
It's heating up. So another one, this one's about materials, right? Metals, miners needed for electrification. Very much you can drop it on your toe kind of stuff. Copper, steel, aluminum. I mean, who thought aluminum would come back? I was joking with Leisha the other day. I said, I bought a package of aluminum from Costco. It's 640 feet of aluminum. I mean, I'm going to start stockpiling this stuff the way aluminum's been going up because, maybe it's going to be worth, maybe it's like having a gold bar. You got a Costco box of aluminum and, the sandwiches can be wrapped in something else. This stuff is too good, right? So that's what this stuff is about. AI, again, it's not in the cloud. It's on the ground. It's in physical things.
So, so we have some ideas. And my question now is, what are we going to do to make money in these stocks? So the momentum is there, tons of upside over the next 6 months. So really, what is your plan to capture the upside, from beginning of February through June of this year?
Well, we are going to use my very, very favorite setup, which is called the turbo trade. And it gives us that ability to play that explosive upside, right? So this isn't buy and pray options trading. This is a directional call and financed. And we have a 6 to 8 week window that we typically look at. And timing, a little bit key, but the expiration, the strike levels, very, very key. And that's what I pick in these trades.
So again, a smarter way to play the upside.
Smarter way to play the upside. And so if we move to the next, you already did, I think. So if we're basically, instead of buying something and kind of hoping that it goes up, and anybody who's traded options knows that there's a cost to that. We use an income trade, which is think of that as your base hit. So hit a little bit of a base hit. That's going to help pay for our upside explosive exposure. So we're going to generate a little bit of cash flow. We're going to use that to fund those upside positions over time. So you're not kind of just relying on price going up immediately. Because one of the things is if you've got to be right away, there's extra pressure on that, right? But you are given the ability to wait a little bit, even though you're getting those super greens. There's an amazing amount of confidence that comes with knowing that you don't have to be right, 3 minutes from now. So it's really a way to stay in the game without kind of getting too anxious.
So yeah, so you have two sides on a turbo trade. You kind of have the little income side, and then you have the bada bing side, so to speak. All right, so
Right.
show me how the turbo works here.
Great example here. So here's Reddit, and we got a 28% stock move. We grabbed 3.9% income based on risk, right? We always base things on risk. And then we use that to pay for a whole bunch of our upside, right? For basically the whole upside. And we made 33% on this turbo trade.
And that's a nice little run as well. You ran like $60 on the stock.
Yeah, that was a good one, but they get way better. They get way better. That's an embarrassing one, but I didn't want to lead off with that one. So here's another one. We got a 10% stock move in Amazon. We got 2% income, which is always nice, right? Like income's not bad. It's often a kind of the nice foundational base for an options trading portfolio. But in this case, when we get all these great signals, when we get that, when I get that feeling, that strategic greed, which is based on my MTI, when it tells me, Hans, it's time to be strategically greedy, then we do this. We use that 2% to pay for about half of our upside, and we made 149% on this turbo trade.
Crazy. Okay, so now the next question is, everybody's like, okay, these turbos, you have a little income side, you have a little call side. How has it done? AI 1.0, pretty good. Really, really, really good.
1.0 was pretty good. 32% average trade, 85% win rate. So $1,000 in each of these trades, and you'd be up $17,000.
That's pretty good. That's great, actually. That is great, great, great.
We're happy with that. But sometimes, again, we don't have to. So we've got a layer of income trades as well. We hit those base hits as well. A little bit exciting. And I call them boring, but you can make like 14, 15, sometimes up to high teens, 18, 20% on one of these trades over 6 weeks.
And these are just, these are your little income trades where the average return, like 7% win, but again, it's on a bigger number, much bigger number. So we talked about, like, this is a great track record, by the way. So we
that's
talked about
annualized.
Yeah,
exactly.
That's not too bad.
When we say 7%, Andrew, we're not saying annualized. That's 7% per trade. And it's just a nice, consistent sort of way to kind of carve out those nice returns. And then when we get excited, we slap on the turbo.
All right. So we talked about your success in AI 1.0. So how did you do specifically? So these are the kind of the final results of AI 1.0.
Yeah, so here we go. 34% return per trade. $1,000 into each, as I mentioned. A little over 17,000 in gains, and across a whole bunch of names. Right, we see the Mag 7 there, which are now less magnificent, less magnificent 7. But also other plays, Snowflakes, Palantirs, Nebiuses, a couple of the plays that are really, a couple of these stocks have been struggling lately. But bottom line, 90% of these trades were winners.
Wow. So, okay. Now, everybody, this is the cool part. 2.0. What's in store for this year? That's what I want to hear, right? I want to hear what's in store.
To that last point, Andrew, if I had a dollar for every person trying to pick the bottom on Palantir, on Snow, on these stocks that have been plummeting, and guess what? The MTI is blood red on all of them.
Right.
You don't go near
avoid those. We're avoiding those for now.
But everyone loves the deal, right? Everyone loves the deal. The thing is, in the stock market, it's not like getting a deal at the department store. You're getting a deal and it's getting worse and it's costing you money. So, the MTI is a beautiful way to stay out of those. So let's see what's in store. So I think 2.0 is going to be even better, right? It's in motion. It's happening. There are some undiscovered names. I noticed a couple today. So this is going to be, honestly, 4, 5 to probably 10 years of very aggressive build out. So don't think of this as not AI. This is AI. It's just shifting, right? We're moving from the excitement of all this stuff that we've shown you the previous page and a couple other pages, to the stress that is on power, the stress that is on grids, the stress that is on memory. I love Quanta Services. Why? It's not selling electricity, because President Trump's going to say you can't charge more for electricity. That's going to cost me votes. I don't like that move. I don't care. You think Quanta cares where electricity is priced? No, it doesn't matter where it's priced. They are going to work constantly because they are not dependent on that. That's why I picked Quanta as opposed to somebody who's selling the stuff. That's how you have to frame things. So you can see it. Big names are whipping around all over the place, but underneath it all, we have this layer of stuff that needs to be fixed and maintained.
So these are some items that are coming up.
And this is, here we go. So we've got these things here. We've got federal coordination. As we said, like, isn't it wonderful to have the Fed behind a lot of things you're doing? We talk about, you and Frank talk about rare earths and things like that, the non-negotiables, right? But defense-driven compute demand, you think that's important for them? You think they need compute working as well as humanly possible? Absolutely. They need the drones working. They need all that stuff. This means more money flowing into power management, hardware, optics, all that stuff that we've been talking about.
This is like Frank's kind of bread and butter here, looking at all this sort of stuff. So, yeah. All right. So the MTI tells us, okay, sometimes I hold my trades too long. But the MTI tells me when to get out.
Well, you know what, you use the word hope, and I think that's a tool that a lot of people use. I've traded on hope. Doesn't always work out very well.
No, it doesn't.
Hope is, I used to have as Georgie worked on the floor with me when I was a floor trader, and he'd come over and I'd say, oh, I hope this trade works out. And he goes, you know what, Hansi? You know what happens when you hope? Poo-poo. And he just, this stupid saying, he would make me laugh every time. Just stupid with his accent. He was from Lebanon. He had this crazy accent. Hope is not a strategy. The MTI will enable you to not have to trade on hope. Yeah. And so, absolutely, it's going to help us ride this trend because it's going to get us into those trades at the right time. It's going to keep us in those trades, and it's going to help us manage those positions.
So the only way to do that, so this is how. How are we going to do this? How are you going to get the MTI? How are you going to capture the upside? Turbo income. I love it. Join Hans and you get all of these goodies. Look at that handsome guy right there. So turbo trades, you get the key to making triple digit gains in all of these things is Hans will use the MTI, get you, look for stocks that are on the verge of the breakout, use the MTI to get into the stock. Use turbo trades to leverage gains, and also the ability to have more frequent and profitable trades comes from turbo income sent directly to your phone and email. So again, as a turbo trade student, you have class, but when the trades come out, when Hans puts the alerts out, you have they can send directly to your phone and email. We have phone notification and email. Also, in order to get his income trades, so you have weekly income trades. The win rate has been 76%, which is crazy. Average return 8% per trade. Remember, it's on a bigger number. And again, Hans is going to manage of a portfolio of all the trades for you. And all that will come to your phone and email inbox. Now, teachable. Hans is teaching you how to use these. You're going to get the MTI. He's going to show you how to use these things. Every Monday at 1 p.m., he's going to walk through income strategies, any trades or questions you have. And then again, we have the 24/7 chat room. You can always use that. Okay, so again, his video library, getting started with income, his key income indicators using implied volatility rank, percentile volatility risk premium, 3 different ways to scan for quality stocks, and also how to put the odds on your side. So this video library comes with turbo income. Now, and actually, here's another thing that I think it's better for Hans to actually describe this. This is a little feature he calls the ripcord. So Hans, why don't you take it away on, I guess, the Hans's safety net.
The safety net, the ripcord. So look, this is the ripcord, right? We go into every situation with the best of intentions, but markets are going to do what markets do. But it's how we react to that is important, and it's easy to execute. You're going to learn that when a certain number goes over 60 for 2 days, you get out of the trade, depending on how much time you have left. There's a little nuance there. It's been very scientifically designed here, and that is what is going to keep you from getting into those more difficult losses, right? We want to learn to kind of get out of things that aren't working out, and the ripcord gives you that very exact strategy, and you can program it in. I actually use Thinkorswim. I go, okay, right click, alert, let me know when that happens. Boom, you don't miss it.
And this is all stuff you get with Turbo Income. So you're getting people in, and you're also telling them, like, time to just hit the bricks, leave the trade. We're done with this trade. Let's move on to the next one. Love it.
Let's move on.
Now here's a bonus, right? So this is what I think people are kind of looking for. All the picks and shovels, this is where your research is going to center for the next 6 months. All that stuff is coming out. You're going to get a full report on their story usage, how all of 2.0 is essentially going to unfold. You're going to get a detailed report of all the stocks we talked to today and 6-month price target. So this is the goodie, like the intro goodie you get when you join Turbo Income. Also, now here's another thing. We didn't even talk about this yet. I can't believe it. I forgot. So longer term trades for the best ideas. So that means the ones you have the most conviction, things that look the best to you, strongest MTI, where you want to hold, again, a leap is because you want to hold something for a longer term and keep a longer gain. And you also have an undefeated track record on it. So tell me a little bit more about your leap trades. If people don't know what a leap trade is, long-term equity anticipation securities, leaps.
It's a fancy sounding name for a call that is a longer term, right? So we like those for some of the same reasons that we like Turbo Trade. Turbo Trade is really a pro trade. I kid you not. I had pros say, "Oh, this is the kind of thing." You're usually the things line up from a pricing perspective in the options. We don't have to get into that here, but it really is a very popular pro trade. Leaps. Similarly, we're positioning ourselves in the very strongest sort of strong secular thematic trends where you really see some runway to an idea. And we position in, we don't have to hold it for a very long time, even though leaps tend to be kind of 1 year and longer, but it just gives you, again, that ability, which I love, that ability to not get shaken out. It gives you time to be right, gives you time to be wrong a little bit even before you're right. And I always love things that help me do that. And
this is kind of crazy. You haven't lost one on a leap trade. So when your conviction is big, it's big. It does very, very, very well.
Yeah.
Crazy they haven't lost on one leap trade yet. And this is part of Turbo Income, right? When basically you have the hots or everything is kind of lining up for one stock, that's when you're going to put on one of these longer term trades. So here is the coolest part. You're actually going to get the MTI for yourself. You can download it. Hans will give you the kind of the kit, the software kit to download the MTI for yourself on TradingView, which I believe TradingView is free, or Toss, Thinkorswim, if you have Thinkorswim platform. And then you're going to be able to use it all yourself, and Hans will show you how to use it. So again, you have unlimited access to see if your stocks have accumulated some sort of long-term momentum for, a sustained move higher. So this is kind of, I would say this is kind of the little bonus you get with Turbo Income. So Hans will give you the trades, but he's also going to give you this tool that will help you. Hey, you have an idea on a stock or something like that. You'll you'll be able to run it through the MTI and really see if it's something that you want to jump on in the short term. So I think that's a fantastic bonus here. Now, actually, people say nice things about you. You're Canadian. I get it. But you know what, Hans? They're going to say you do have a lot of nice things said about you. These are just some notes from some of our students here. And that, he had some insane trades in 2025. It's your first year with us, and you knocked it out of the park, which is why, of course, we wanted you to come to Option Pit. But to put a little bit more fundamental and technical together to come up with these trade ideas. So again, look at this, like just crazy. She paid for her whole subscription with one trade. That's pretty fantastic. Okay, here we go. So Hans, tell us about your membership going forward.
Well, look, I mean, you get the MTI, and if you sign up for the annual, you get the MTI. Right? You get the MTI here. Of course, you get it with the lifetime access. And you get to use this MTI. As Andrew said, you get to put it in your Thinkorswim, your trading view. If you've got your watch list there, it's as simple as click. One by one, you look through each of your names, the stocks that you're watching, the ETFs, and you instantly get that beautiful picture of the MTI to give you really the pulse of what's going on in that particular stock. And then again, pro tip, have your ETFs in there as well, your sector ETFs and things like that, thematic ETFs, to really give you that extra bit of confidence there. And so this is it, right? You get access to Turbo Income for life. If you grab the lifetime one, you can't get rid of me like luggage. I'll be there forever. But you will, if you want to make money, and if you want to learn some fantastic stuff, look, you get this live sessions every week. This isn't, hey, thanks for your money, we'll see you in a year. Every week we meet, we talk about income trades, we talk about leaps trades. When I started this thing, we didn't even have leaps trades. I went, you know what? I love these trades, and look at the record. So, at Option Pit, we are all about delivering actual value. There's a whole bunch of slop out there. What do they call? Don't they call that this AI? What do they call it, Andrew? AI slop? I think it's like this whole idea of like there's just so much AI content and pictures being created. Then they now have a name for it. AI
it's just a
slop.
bunch of junk.
Yeah,
it's just like that. But look at the deal. Like your lifetime access is $3,400, but it only renews at $349 a year, which is pretty good. But if you do 1 year, $17.99, but it renews at the yearly. If you just want to try, I just want Hans's trades. I just want Hans and his trades. That is $9.99. I think lifetime access is a pretty great deal. Considering you get the MTI and you get basically Hans, you get Hans forever, which is pretty fantastic. So again, there's some stuff in the chat on top. If you want to sign up, click the link. Get ready for 2.0, which is spilling out soon. Literally, when we started this a couple weeks ago, Hans, to get this ready, at the meeting, you're like, okay, like 1.0 is kind of done. You guys got to start looking here. And it's already unfolding in real time. Like literally all the 1.0 stocks are down 10, 20% from highs, some more. So it already has started to spill out. You had this meeting, you're like, guys, then of course we have to get these presentations together. It doesn't happen overnight, but you're already seeing like 1.0 is like a little cooked. It's a little cooked. The whole idea of 2.0 and just what you're seeing today, the market looks terrible and these stocks look great, right? Because the money, and we can talk about Bitcoin, like you're selling your Bitcoin or silver or gold after a big run. You want it to go to the next thing, right? The next thing is 2.0, and that's what you're going to get with Turbo Income, okay? The next thing is 2.0. 1.0, they're great stocks. There's still things that I would like to buy. However, I'm not expecting to buy Google and make 100% this year. Okay, you're not going to buy Amazon and make 100% this year. GLW, That has a much better chance. One more thing though, Hans, I got one more question for you here before we go. And then maybe we'll take some questions from people. What's 3.0? What's coming after everything gets built? What do we have for 3.0?
Oh my goodness. What do we have for 3.0 when it's all said and done, when we're all riding our like in Wall-E the movie where the humans are just kind of floating around on the hoverboards and just, eating ice cream all day and what a life that's going to be. Look, I mean, this is going to evolve. We're going to see a lot of disruption. And so I think more than ever, we talked about it, on shows on Ticker Highlight on our show this morning. Is look, there is a lot of disruption out there. So I think it's more important than ever. It's actually easier. This market was easier when everything was like all about mag.
Right.
Now there's pieces going this way and going that way, and everyone's trying to figure out who's going to make it and who isn't. It's become a very binary market, right?
Right. Well, I think they need a guide. They need a 2.0 guide. They're going to need a 3.0 guide. And probably you were by far our best fundamental trader at Option Pit by like a million miles. So you were on all over 1.0. You're already starting to be on 2.0. So just totally fantastic stuff this year, Hans.
Well, and that's the thing. And what's nice about it, Andrew, is it's community as well. And so sometimes as a trader, as an investor, you kind of just, you kind of, like, I remember a lot of people when the S&P was like 1,400 points lower, kind of going, I don't know, or haven't we rallied enough? And I said, are you kidding me? We're just getting going. This is just starting. And so sometimes it just takes being in a community where everyone kind of goes, yeah, you know what, this sort of makes sense. And you get that sort of, that sense of camaraderie and inclusiveness, and you go, okay, yes, okay, let's do it. I believe it. This MTI is telling me to go, and I'm going to go too. And I think that's what this next phase is going to be about. I think it's going to be a multi-year phase of AI that's going to come back in cycles and in different ways. And everyone needs you and I. It's not that we're that great. I mean, hopefully we are great, but look, a lot of people have real 9-to-5 jobs. They can't watch stuff like we do. You have the guidance with a program like this to really have your finger on the pulse of everything going on. And I think that's really, really important.
So everybody, you click up top. If you click up top, get the MTI for yourself. You can get 1 year of turbo income plus the MTI is $17.99. That is a question. Nico J said, paid for my membership with one Goldman Sachs trade. Gotta love that. I'm going to grab a couple more questions out of here. Don't have many leaps. Want to need some more leaps, Hans. Okay, so he's looking. Well, and also right now, things are a little shaky. He's getting ready. Let's see here. How is your health plans? He's checking for the lifetime option. Hans, push-ups. Can you do anything?
I can do 39 push-ups. I can do 39 push-ups. I really can. Okay. All right. That's my best, but I can usually do like 28.
So Montana Mike is asking.
But you know what? Great.
Go ahead. Is it available?
I was just going to say that the Goldman Sachs was a great example, Andrew, of how thinking a little bit outside the box. So I remember when it early on in the 600s, I said, Goldman Sachs is an AI stock. And everybody would say, what are you talking about? I said, it's an AI adjacent stock. They're going to get the deals. They're going to get the IPOs. They're going to benefit from all these things that they're so good at. They're going to implement AI. Like that area of finance is one of the easiest places to implement AI. And then the CEO came out and said, yeah, we can do IPOs for like 95% less cost than. So I said, this is an AI stock. You just don't realize it. So you've got to be able to get out of saying, well, just NVIDIA's AI, and there's not a whole lot more than the Mag 7. There are, and the great part of this AI 2.0 is there are more stocks, right? We're going to have a smorgasbord of stocks.
Be better because it's more broad based.
Yeah, exactly.
There's more choices. So Montana Mike is asking a question. Tasty Trade. I don't think it's on Tasty Trade. However, TradingView is free. Montana Mike. You can download TradingView and put the MTI on there. Let me see here. Let's see here. Hope. Yeah, we don't like that word. We don't use that word. I was just about to ask if there's an MTI scanner. Mind sharing your code? If you buy Turbo Income, he will give you the little widget that you can put in TradingView or TOS. Let's see here.
Somebody's asking how much. Somebody said, "Do you need to buy the stock first?" Well, not really. We use options, right? So we're not really ever using stock. Nikki Nichols asked it, and it's using options, right? It's using the beauty of options. And then somebody else asked for how much money in each trade. Well, the nice thing about turbos is they're pretty capital efficient, right? They're pretty capital efficient. Some of them you can do for $600-700. Some of them are going to be a little bit more than that. But the nice thing about the turbos is you can actually adjust the strike width to really achieve the capital that you're comfortable with. So they're very versatile in that way, right, Andrew? You can just kind of mess with that strike distance. You can make it $5. Yep. You can make it 10. You can make it 30.
Yep. So yeah, and that's all part of going to the classes too, as well. Like Hans is there, so when you ask him questions, if you want to alter something or do something a little differently, but you're still going to keep the flavor of what the MTI is giving you. Reese saying for $9.99, what else than MTI? You get all Hans, you get class, you get all the turbo trades, you get the entire library. You get his ripcord strategy for limiting downside. You get all your alerts sent to you. That's $9.99. The difference between $9.99 and $17.99 is the MTI. That's the big difference, I believe.
Yeah.
Also, click up top. Also, you know what? If you already have a subscription or two, you just want to upgrade to Trader X, call them, ask them, say, hey, I want this Hans guy. I want Hans. I want all Hans all the time. You can do that. Give them a call. If you already have a product at Option Pick, give them a call. Let's see. What else I'm looking for? Ed G says nice things about you, Hans.
And by the way, Andrew, did you mention that you get that MTI and you get to keep it? That's not just, hey, I get it for a year.
It's yours forever, and it's on your software.
Yeah.
Okay, let's see here. I'm looking. I think we hit. Actually, there was a lot of GLW people, but from like 15 or 20 years ago. JMac is asking, do you recommend the expiration and strike price of the option? Yes. He will tell you exactly which option to buy. Hans is, if anything, he is very thorough. And so all those recommendations come out via text and email. These are good questions tonight. Anybody else have anything?
They are, yeah. What's this one? Jose asking about MJ Electric versus Quanta. Jose, that's very specific. I mean, aren't they kind of like? I think MJ Electric's just, they're not as broad. They're not as kind of diversified, right? I don't even think they're listed. I've heard of them, but they're just really electric focused. Whereas Quanta, I want companies that have sort of a blanket approach. They kind of have, why Google is great? Because they have their fingers in so many different pies. If one's not doing as well, another one's probably doing well. If you're just one thing, I think you'd be challenged, right? If you're a software company out there that basically makes like, I don't know, thumbnails or infographics, you're done. You're out of business. You're out of business. So you want companies that can kind of do a lot of different things, wear a lot of hats.
Question: can we use PayPal credit? I'm going to have Ryan or somebody answer that. I do not know if we use PayPal or not. I don't have an answer for that.
I'm pretty sure on PayPal you can, even if you check out as a guest, you can use credit card. So I think it's just a little extra step.
Yeah, that is a customer care question that I am totally not able to answer. All right. Well, I've got at least 3 stocks. I know I'm going to have 5 stocks in a couple days. I'm going to download TradingView and put the MTI on it so I cannot take my hopium bowl away every once in a while.
Hopium.
And Hans, thank you for being here. Everybody, thank you for coming. I know it's a Thursday night. No football, not until Sunday anyway. And with that, I guess, Hans, thank you. Everybody, thank you for coming. If you have more questions, call our customer care team, 888-872-3301. Also, if you have questions about Hans, if you're an Option Pit subscriber, ask me tomorrow in the chat room. And I'll be happy to answer any questions you got. And we'll see what happens tomorrow. We'll see if the sell-off continues. I don't know. I feel like it's going to kind of run out of gas.
Yeah.
Reese is asking, what's your life expectancy? Hans is going to outlive
for the
me.
lifetime. For the lifetime.
Yeah.
Well, I need to do more push-ups.
What's your blood pressure?
I got to get it. I got to get from 39 to 69 push-ups. I'm pretty sure. Okay. Again, 28 push-ups.
I know my resting, my blood pressure is pretty normal, and my resting pulse is, I don't know, like 60 beats a minute or 59 beats a minute or something like that. So not bad, not great for being old.
My blood pressure is incredible. We've never had a problem with that. My cortisol is maybe a little high at times, but I'm an option trader.
Yeah, that comes with it. It comes with the. This presentation will be videotaped. There's lots of goodies in this presentation, especially what Hans sees as 2.0. It will be emailed to you if you provided us with your email address. That will be going out later once everything is processed. All right. So for Hans Albrecht, who is our, we'll just call him our king at cash flow Hans. And me, Andrew Giovinazzi, president of OptionBid.com, director of education. Thank you for coming to take a look at 2.0. You guys have a good evening. Again, don't forget, click the link up top if you would like to, and you should be a subscriber of Turbo Income for the next leg of AI 2.0. We're out.
Thanks, Andrew. Thanks, everyone.
All right, Hans.